Welcome to episode 52 of the 5-Minute Investor, the podcast where we break down stocks at the heart of two stories shaping your investing week. I'm Trevor Abbas.
And I'm Jonathan Brown. Each week, we bring one stock, one headline, and one reason investors should care.
Today, we're shedding light on the U.S. and Israel's ongoing war with Iran, whose top global oil reserves, now cut off from Western countries, and strong arming of the Strait of Hormuz, a key shipping route, is sending markets into a tailspin.
A story about supply chain resilience, defense, and energy storage security. One company that ties this all together is VanadiumCorp Resource Inc, VRB, on the TSXV Venture Exchange. Market cap of just over 2 million Canadian dollars.
All right, tell me, John, what is their deal?
The company owns vanadium, titanium, iron projects in Quebec, designated critical minerals in Canada and the U.S.
And what exactly has the company done with its portfolio lately?
However, back in October, the company addressed this very issue with a very comprehensive update on the projects, saying the team is advancing both through new geological surveys, resource model updates, and expanded exploration work, while also progressing its patented processing technology to support what they call cleaner, more reliable production of vanadium, titanium, and iron.
And how has the stock responded to all these advances?
Well, after the company put out that update, its stock doubled in value, seemingly overnight. It just shot right up and peaked at 34 cents a share. Since then, it's calmed down to around 12 cents. Well, compared to this time last year, VRB stock showing some pretty good growth. It's risen around 9% as of this recording.
I can only suppose that this is given the turmoil over energy and the war in Iran.
The company pretty much painted that very picture. The geopolitical backdrop places the company squarely inside government-backed initiatives for domestic secure supply chains. That's an area of growing strategic emphasis due to geopolitical instability, one way or another. The Lac Doré property is already recognized as one of North America's more substantial vanadium deposits, as a large historical resource and ongoing model updates to advance its classification. Now, its Iron T project also shows extensive strike length, at-surface mineralization, and comparable metallurgy to Lac Doré. That gives VanadiumCorp a multi-asset pipeline rather than just a single flagship. This isn't the only story in this space either. Now, Trevor is going to tell you about another company that's a stock that's directly comparable.
That's right, John. My related stock for big episode 52 is Strategic Resources, ticker SR on the Venture Exchange, a critical mineral company focused on metals essential to decarbonizing global industry, including vanadium, titanium, and high-purity iron.
So how does iron tie into the ongoing conflict in Iran?
Well, the Gulf region has emerged as a major supplier of iron ore pellets over the past decade to both directed reduced iron and steel manufacturers in Europe, the Middle East, and Asia. And the market, already constrained by a lack of high-grade resources and a concerted push towards decarbonization, will only tighten further now that seaborne shipping routes and transportation costs are being disrupted by the conflict. The national security benefits of onshoring supply, especially for Western countries, are readily apparent.
I got to ask what we're all thinking. Why should investors consider Strategic Resources as a key name when it comes to reorienting global iron supply?
Well, John, the company's flagship BlackRock project, only 20 kilometers southeast of Chibougamau, Quebec, is currently North America's most advanced and lowest carbon source of new iron ore pellets capacity. With Phase 1 development planned to produce 4 million tons of high-quality pellets per year, bringing reliable, clean energy-aligned feedstock to North American and European steelmakers. Commercial production, subject to a final investment decision, which the company is rapidly advancing towards, will take only 30 months to reach, putting the company on a near-term track to meaningfully contributing to the Western iron ore supply chain.
Now, have the shares of Strategic Resources priced in the company's potentially a critical role in Western national security?
Far from it, actually. Seeing as shares have given back about 39% year over year and more than 85% since 2021, last trading at 30 cents Canadian. At an only $18 million market cap, investors are looking at a serious bargain against the company's massive potential, with 4 million tons of production representing more than $400 million US in revenue at the current spot price.
So let's address the elephant in the room now. How helpful are market dislocations such as those caused by spikes in geopolitical tension when it comes to strengthening an investor's a long-term return?
Over the short term, these dislocations are really nothing more than a trading signal, where your nominal percentage gain will depend on how much capital you bring to the table. And any reasonable market participant knows that the vast majority of traders lose money the more they try. Over the long term, however, dislocations are a reminder that business fundamentals will always prevail in the end, no matter how dire the circumstances, as market history has shown us across the multitude of wars and pandemics and momentary swells of euphoria that have done little to dissuade our pursuit of the next dollar.
You can find links to the articles from today's episode in the show notes and more investing insights on stockhouse.com.
And you can find the 5-Minute Investor on Spotify, YouTube, iHeartRadio, Podbean, Stockhouse, or wherever finer podcasts are found. This podcast is produced in partnership with VanadiumCorp Resource Inc. and Strategic Resources Inc. and is intended for informational purposes only. For full disclaimer information, please visit stockhouse.com/disclaimer.